Hello students, good morning. Today we will discuss about the implement and monitor the risk management program. So let's start. At the point we have discussed three of the four steps in the risk management process. The fourth step is to implement and monitor the risk management program. This step begins with the policy statement. A risk management policy statement is necessary to have an effective risk management program. This statement outlines the risk management objective of the firm as well as company policy with respect to treatment of loss exposures. It also educates top-level executives in regard to the risk management process. Give the risk manager greater authority in the firm and provides standards for judging the risk manager's performance. In addition, a risk management manual may be developed and used the program. The manual describes in some detail in risk management program of the firm can be very useful tool for training new employees who will be participating in the program. Writing the manual also forces the risk manager to state precisely his or for his personal responsibilities, objective, and available technique. Here is the corporation with the department. It is not is clear to text. The risk manager does not work alone. It will be other corporation with other departments. Other the functional departments within the firms are extremely important in identifying fuel loss exposures and the method for treating the loss exposures. This department can cooperate in the risk management process in the following ways. There are a lot of the key features of this ways. So let's start. Accounting. Internal accounting controls can reduce employee fraud and theft of cash. Finance. Information can be provided showing the effect that losses will have on the firm's balance sheet and the profit and loss statement. Marketing. Accurate packaging and product use information can prevent liability lawsuits. Safe distribution. Producers can prevent accidents. Production. Quality control can prevent the production of defective goods and liability law, so its effect safety program in the plant can reduce injuries and accidents. Human resources. This department is responsible for employee benefit program, retirement program, safety program, and the company's hiring, promotion, and dismissal policies. The list indicates how the risk management process involves the entire firm. Indeed, without the active cooperation of the other department, the risk management program will be failure. Here is the periodic review and the evaluation. So here is the summary of this small summary. So I just show you some preview of this, but I will not discuss. I will skip this topic. Now we will go to the next topic of this insurance benefit of the risk management. The previous discussion shows that risk management process involves a complex and detailed analysis. Despite their complexities, however, an effective risk management program yields substantial benefit to the firm of organization. Major benefit include the following: the loss and the worst loss risk management objective are the more easily attainable. The cost of risk reduce, which may increase the company profits. The cost of risk is a risk management tool that measures certain cost. This cost include the premium paid, retained, losses loss control expenditure, outside risk management service, financial guarantees, internal administrative costs and taxes fees, and certain other expenses. Because the adverse financial impact of fuel loss exposures is reduced, a firm may be able to enact an enterprise risk management program that treats both fuel and speculative loss exposures. Society also benefits since both direct and indirect consequential losses are reduced as a result, and pain, suffering, and reduces. In conclusion, it is clear that risk managers are extremely important to the financial success of business firms in today's economy. In view of their importance, risk managers are paid relatively high Let me have see inside 3.2. We already discussed about the 3.2. Here is the personal risk management. The principle of corporate risk management are also applicable to a personal risk management program. Personal risk management refers to the identification of pure risks faced by an individual or family and to the selection to the most appropriate technique for treating such risks. Personal risk management also consider other methods for handling risks in addition to insurance. Step in personal risk management. A personal risk management program involves 4 steps. Number 1, identify loss exposures. Number 2, analyze to loss exposures. Number 3, select appropriate technique for the is treating the loss exposures, and the number one, the last one is implement and review the program periodically. Here is the inside 3.2 insight. So there is the flow chart. No, this is not a flow chart, this is the only chart, and that have a lot of information of this. So let's see. Here is the summary. How do you stack up? Here is the average risk manager compensation by company sales volume. Now we will see the identify loss exposures. The first step to identify all loss exposures that can cause serious financial problems. Serious financial losses can result from the following: personal loss exposures, loss of earned income to the family because of the premature death of the family head, insufficient income and financial asset during retirement, catastrophic medical bills, and the loss of earning during extended period of disability, loss of earned income from employment, identify theft. Here is the property loss exposures. Detect physical damage to a home and personal property because of fire, lighting, wind, storm, flood, earthquake, or other causes. Indirect losses resulting from a direct physical damage loss, including extra expenses, moving another apartment during the period of reconstruction, loss rents, and loss of the building or property. Theft of value personal property, including money and security, jewelry and furs, painting and fine arts, cameras, computer equipment, coin and stamp collection, and antique. Detect the physical damage losses to car, motorcycle, and other vehicle, and collision and other than collision losses. Theft of the car, motorcycle, other vehicles. That is the liability loss exposures. So you will see when you buy this book. So today our topic is end. See you tomorrow.